Good morning, everybody. It's Chris here from Serene Education with the 4 major analysis update for the 1st of August 2011. Going to be starting with the euro against US dollar and our CTC strategy. Let's look at the daily time frame to see what's likely to occur. Good news, to a degree. We hear that the Republicans, Democrats have come up with a plan to alleviate the debt issue at the moment. What we could be looking at is some bullishness on the US dollar market. If we look at the euro, for example, you'll notice that the 2 prior daily candles forged out a support area, and just get to draw a straight line now. You'll notice that the lows, even though they traded lower, they still closed slightly higher at that level there. I've given up. There we go. And this one here, bullish engulfing the prior one after 2 consecutive negative days. If you look at the upside trend, however, swing higher, is that the next swing high? Are we going to see price now pulling away from there and looking at potential higher swings, dictating a swing higher, which would be an upside movement? If that's the case, then we need to see price actually realistically trading above the close of Friday's candle. So if we can see price closing above 1439.60, then it could definitely confirm that we were looking for further upside movement. The bullishness of this candle, our shooting star hammers, and the benefit of hammers is, even though you are seeing downside movement, i.e. like here for example, or down here or there, there again there's more of it, is that after a pronounced downtrend or downside movement, you're seeing price action happening, occurring at the top end of the wick, but you see a long wick to the downside. So a lot of selling at one end, a lot of sellers in the market, but ultimately the buyers at the top end, and you're seeing price action occurring at the top end of the wick, confirming a hammer. And if that hammer is happening on a support or resistance area, or prior support resistance in this case, you can just see here roughly, then there's more likelihood of seeing a change in market sentiment, and we should be looking for upside movement, and this is the case. So euro looking slightly bullish on the candlestick patterns alone. CTC is giving us an indication. So daily, if price can stay above the close of Friday's candle, so 1439.60, you can see price closing above that, i.e. on say a 30-minute or an hourly, in particular hourly would be even better, then we could see potential, this is just a pullback and then a measured upside movement. Now where it's likely to go to? Well, we've still got a slight hesitation here, if you can see at this level here. So the high of this candle here at 1443 is not too far off, so ideally a break of that candle, but even a close above this area here would definitely confirm that we're now looking for further upside movement, and the top of these 2 candles here would be our first target, so roughly around the 145200 mark. It's coming thereabouts on prior resistance, and then ultimately a break above that would see 1470, the 14700 mark being tested, and then ultimately way up here, roughly around the 148400 mark would be our next possible target. So intraday we should be looking for further upside movements. Ideally if we can close higher than the prior swing here, for example, but it's managing to trade slightly higher than the close, or sorry, the high of Friday's candle. That momentum needs to take it above these prior candles here to this swing, and you can see we've seen some further hesitation at that level in the past on a daily time frame. So breaking and closing higher than 144300 would definitely confirm further movement to the upside on this candle these 2 candlestick patterns here. So, and if you look at the intermediate trend to the upside, you're definitely seeing that dictate. So upside movement intraday, got to be looking at, but first thing it needs to do is break and close higher than 1443 to definitely see further momentum to the upside during the course of this week. The next pair I'm looking at is sterling against US dollar on a daily. Let's have a look at the daily time frame for sterling against US dollar. You'll notice that Friday's candle, we had a lot of momentum, a lot of movement on this on price itself. We saw a lot of selling taking place. That selling there was short-lived, however. it failed to break below this level here, and if you look at where price action is trading at the moment now, you can see we're posting higher swings, which dictates a move higher, and all the moving averages below, and CTC on a daily time frame is looking bullish because we got the blue and blue on either side. So blue arrow, blue bars, and the CTC is blue on either side, dictating upside movements. So price action on Friday, a lot of whipsawing, a lot of volatility, primarily because the US government was still trying to thrash out a deal amongst themselves to try and sort out their debt ceiling issues. Are they going to raise it, and do they should be looking at cutbacks and how those cutbacks are going to take effect and all that type of thing. And there is some sort of deal on the table, but is it really going to sort things out? It remains to be seen. So this week, the first couple of these days of this week, of the remainder of this week, would definitely give us an indication of that. So as it stands now, you can see cable is trading slightly higher than Friday's close, and we are heading into this area here that we've seen prior consolidation, if you look at it. But one thing it needs to do first of all is it needs to be trading above all that, and if possible above this Friday's high. If that's going to be the momentum's going to be shifting to the high, it needs to be trading above the price swing high. So 1646.80 needs to be trading above that to definitely give us an indication of further upside movement. It is on a daily looking bullish because of the fact that price action occurred to the upper end of the wick, even though it was quite stagnant, quite small. However, because it closed higher than the prior two resistance candles here that we saw on a Wednesday and Tuesday of last week, then we should be looking. It should still. It looks to remain bullish, and that's primarily because the US dollar is looking a bit shady at the moment against sterling. So, that momentum's got to take some upside movement. Let's have a look at the hourly chart. Sorry, the 4 hour. You can see the bounce. We've seen price is now breaching the high that we saw on the 27th of the 7th, and if it can stay above that area here and find support, and then as I mentioned it's trading above prior resistance highs, then we should be seeing further extensions higher. Swing highs are dictating price movement to the upside. Now we'll pull back. This one of here pretty much came back to the support, price support, and we saw a bounce higher. This was on Friday, late Friday evening US session close, and if as long as price can trade above this area here at the 16, say 44 mark, then we should be seeing further extensions higher. Next up is the US dollar against Swiss franc. Swiss franc and its next one, the Japanese yen, are two that are going to be where we should be looking at to see if this news of this potential sorting out or trying to sort out this issue with the debt in the US is going to definitely take shape. If we don't see the US Swiss franc and the US Japanese yen doing anything significantly, then we definitely going to get an indication that this deal that they've come up with, it has not really taken or the market makers out there haven't really taken on board, and if we don't see any price action on those two pairs, or these two pairs in particular, then it doesn't fare too well. So if we look at the US Swiss franc, you can see we've been in a negative trend for a long time. CTC is very red, so lovely swings to the downside, beautiful consolidation breakouts to the downside, and we've been in an extended downtrend for some time now after a definite break, and you can see the swings lower have been very, very, very sharp. A lot of consolidation and further breaks to the downside. So consolidation break. Friday we saw that massive move to the downside, and then we've seen this one where we've seen the news that's come out during the course of the weekend, and then we saw an open, and we're trading slightly higher on this the candle. So ideally we want to be trading above the prior two dojis beforehand, engulfing this. A bullish engulfing pattern would definitely bode well for this pair, but we've got this little trend line over here that's going to be in the way. So you can see swing lows depicting price action to the downside, CT's in our favor, and we have everything in our moving averages are evenly spaced out on top of us, confirming the bullishness in this bearish trend. So momentum wise, it's very, very strong to the downside, and the moving averages are confirming that, being evenly spread out. Lots of air between them, confirming that that momentum bearish is looking very, very strong at the moment. So ideally, it needs to be trading above all this in my eyes. Ideally, if this is going to be long-term bullish, then we need to be trading above the intermediate, well, this major downtrend. So got to be trading above the 21st to start with, because that's been prior resistance or support. Then it's going to trade above the 50, which happens to be the major downtrend area, and ideally breaking above this consolidation band here that we saw through the whole of June, and trading above 155 to be looked at as a possibility of long to at least a 200. But this is long term. So for now, bullish engulfing would definitely do it. It can break, gets high above this, then we can definitely look at the major trend as a possibility. Otherwise, a break and close lower than Friday's low here, just above the 785 mark, would definitely confirm that we're going to see further pushes into the downside, and we should be looking at a possibility of that happening, because we're still negative across the board on a daily for that. So intraday, if you're looking at possible setups, let's have a look. If you look at the 4 hour, for example, we've seen this breakout of a consolidation area, and you can see prices now trading higher on the news, going from into the Asian session, now going to the European session open, but it needs to creep above that. So if it can trade higher than 800, then we're definitely looking for a possibility of a consolidation and change in market sentiment. If not, then we're just seeing this breakout, a pullback. You look at where it is now, so if you take the high of that candle and where it is now, it's trading at 61.8% fib of that initial breakout. If it breaks higher than that, then we're going to see a break of the trend, and we should be looking, hopefully, if price can get above 80, then definitely a consolidation in this pair for the remaining of the week. But if it doesn't, it fails at this level here and continues, you'll notice that all the moving averages above us, CTC is in our favor, so the shorting will still be a factor for this pair. Last pair of the day is the US dollar Japanese yen. You can see we've been in a negative trend for a long time, a very long period of time. You can see price has been consolidating in a range between 2 points. The 80 has been a very strong support level for this pair to the downside, and we can see we've been consolidating between these lower swings, depicting price action lower. CTC has been primarily red, dotted with a couple of blues, but these have been failed attempts of breaking higher. And then recently we saw a massive break to the downside below the 80, and we've seen targets or areas where we've seen price support and resistance to the downside being tested. There's one, noticeably the last one we've seen is price on Friday breaking lower than the previous low at 77, and then the news out this weekend, we've seen the US dollar gather strength against the yen, and we almost have this bullish engulfing. So this is the case, it needs to remain like that. So we can see price still pushing higher, closing higher at the end of the week, engulfing the past couple of days. Then this is definitely going to confirm that we might see a pullback of some sort, and ideally we'd start be looking at the 7900 mark, the 80 mark, and hopefully trading above that. Failure to do so, we'll just see this pair consolidating, and then we could see a revert to the downside for this pair. So if it can stay like that, intraday, if we can see higher swings, then what we could see is price moving higher. And if you look at, I can't do it at the moment now, but if you look at the extension from here to there to there, you're going to find that the 100% extension of this initial move has been reached, and we are seeing a pullback, and that's coming at a prior low, an all-time low for this pair. Let's have a look and see if that's the case. So that's to this area here, back to this one over here. So the 100% is not too far off of this initial move, and we're seeing a bounce now. But this correction here is taking place at a prior all-time low on this pair. Yep, before we saw the intervention and the unfortunate news of the earthquake and tsunami in that area there in May. So hopefully we get a bullish engulfing pattern here would definitely confirm further upside movement for this pair, looking for the remainder of the week. That's it for today, guys. Hope you have a fantastic trading day. The news is out. Let's see how the market actually takes it in and what they seem to think is the long-term outlook of this news. If we fail to see the US dollar, Japanese yen, or the US dollar Swiss franc actually moving, then we're just looking at a slight consolidation before we see further extensions lower for those two pairs in particular. Euro and sterling corrections. We're seeing corrections now, but if they can find supports above prior highs or daily highs from say Thursday and Friday's data, and then they're looking pretty good for further upside movements for the remainder of the week. Hope you have a fantastic day and trade serenely.